breaking news. We've just gotten this. Major indecisiveness in advance of tomorrow's jobs report for the month of February. The Dow has crossed the unchanged line 70 times today, much of it coming in this final hour, just at the flat line right now. All right, let's get to this. Bond King Jeffrey Gundlach warned you on this show back in January that this would happen. The Fed would absolutely hike this year, and there would be reaction that you needed to know about. It's all but certain the Fed will raise rates a quarter point next week. The probability for Fed funds futures, 90.8%. So Gundlach also came out and said yesterday that the 10-year Treasury is in a, quote, zone of death. At 2.6% for the yield, it has finally crossed the 2.52%, first time this year. DoubleLine has $101 billion in assets under management. The firm's chief investment officer, Jeffrey Sherman, is also the portfolio manager of DoubleLine's strategic commodity fund. And I'll tell you something, Jeffrey, that tease that we just gave was a surprise. And I want you to reveal to our viewers the sector that you feel would be most hurt by a rate hike, because it's the exact sector Wall Street says will be most helped.
Yes, so thanks, Liz. What we think from the Fed's behavior and the pricing, as you said, almost near certainty next week of a hike, is that if the Fed continues down this path, although the market's pricing about 2.5 hikes or 2.6 hikes as of today, is that if the back of the yield curve does not respond commensurate with those rises, it will actually flatten the yield curve and therefore make some of the financial sector a little more vulnerable. This is a sector that's been on a tear since President Trump took over.
Yes.
With the new administration, up over 35% since the election. And it's essentially priced to perfection based on deregulation, corporate tax reform, and then also the idea that perhaps the yield curve would indeed steepen. But we've seen actually the contrary so far this year.
Okay, so Jeffrey Sherman, everybody, to be clear, is warning you that financials could actually get hurt if we do see a rate hike next week. All right, tell me what you're buying then.
Well, just to clarify that too, Liz, real quick, not just one rate hike, but if the Fed gets more aggressive in that and starts to really press the front of that curve. But to keep people on a happy note before the closing bell, too, we do still favor President Trump's stimulus program, and that could be very beneficial to some of the industrial materials producers here in the U.S. as well, as we likely see some partnership between the public and private sector in building the infrastructure program out. So I think that's a better likelihood of happening over the course of 2017.
We're going to put all of Jeffrey's recommendations up on Facebook.com/Liz Claman. Too close to call? I don't know. The Dow is up 2 measly points. Our thanks to Jeffrey Sherman.